everybody. Welcome back to Markets on the Move. I'm Marlin Bohling with you along with Oliver Sloup, Blue Line Futures, as we get ready to put the wraps on a trading week and a month. Oliver, we came across the finish line at the end of August here with corn being kind of a superstar on a Friday. I was surprised by that quite a bit. I didn't know that corn would make that much of a move to the upside with harvest coming up and end of the month trading like that. I thought maybe people might be leaning the other way. Were you
Well,
surprised?
and that's how we started the week, right? We had a good week last week and then chopped around to start this week's trade, and there wasn't really a whole lot of new news to get the market excited, really, across the grains. It was a very, very choppy week with kind of mixed trade throughout it. Corn, soybeans, and wheat. But corn, really an impressive finish yesterday. Yesterday morning, we came in a little bit lower, but then we were able to rebound and finish near the highs of the session. Had a bullish engulfing flag pattern starting to develop, and that fed into some momentum to round out the week and month trade, as you had mentioned. And I'll hop over to the chart here for the December corn contract. We can kind of pull up what you and I have talked about over the last several times we've been on, kind of looking at some of these big technical levels. We've got the 50-day moving average and trend line resistance, both of which we were able to hurdle out above in today's trade. I think the key next week after the long weekend is to get some additional follow through. These levels right here that were resistance are now going to be pretty significant support going forward. The fundamental landscape has shifted really since WASDE Day, but we need to see some follow through and upside momentum. If you're looking for upside targets, one of the levels that we've been looking at a little bit longer term is that 430 level. As you can see, that was old support in May and June, then the eventual breakdown point. And then you've also got, I believe, the 100-day moving average coming in there as well. So that would be the next upside, so long as we can keep the momentum going, but we'll see what next week brings.
From a technical point of view, on that chart that you have on the screen, for confirmation, you would want to, I guess, what they call a full candle close above that downtrend line, wouldn't you?
Yeah, so we want to see, again, consecutive closes and some follow through next week to really kind of feel confident about this market. We've been pretty optimistic. You and I talked about it even a couple weeks ago. The trade following the WASDE report was really encouraging, really even on WASDE Day, and I probably sound like a broken record. We were down 14 cents that day, but really we're only below the previous week's low by 2 cents, and with a report as bearish as that, you would have expected to see, I mean, you could have probably made the case for a limit down move on that day, but we marked lows, and then in the preceding days, we were able to defend those lows and march higher. So I think we got a lot of the bearish news out of the way. We ripped the Band-Aid off, and now we can kind of see where the market goes from here. Last year, really kind of similar trade where we bottomed out on August 27th and we're able to rally since then in as much as I think 50 or 60 cents until contract expiration. So knock on wood, we can get some sort of identical trade set up to that going into the end of the year.
Now, I like to follow, I guess you would call it slow stochastics for a technical indicator. And they look surprisingly overbought to me here on December corn as we wrap up the month. Is that kind of a caution flag for you?
I don't think it's not something I follow very closely. I'm always a little bit cautious about any position in the market because things change so rapidly and things develop from day to day, especially in this environment where technicals and headlines are flying all over the place and we have more market participants than ever across a wide range of spectrum. So it's always good to be nimble and be a little bit cautious. If you're not cautious, you're probably going to learn to be cautious at some point. But I think this week's price action was constructive. Hopefully get some follow through. Soybeans on the other side, I've tried to be a little bit more optimistic on them. They had a pretty good session in today's trade, but they've got to get something going here next week. I'm afraid if we can't build on the momentum that we've seen over the last couple weeks, that sellers might start stepping in that market.
Does that have the appearance of a flag, though, on the chart?
It does. We're kind of consolidating. Looks a little bit like a bull flag. Hopefully we can get some follow through to the upside. You and I've talked about potential upside targets in November beans. near 1070. That's the upper end of the year's range, which is defined by this yellow box. So I really think if corn and wheat, can start to trade higher, maybe soybeans join the party and we can make a run at those levels. But if we do get up there, I would probably urge producers to be maybe a little bit more proactive and at least layering in some additional protection at those levels. There's a lot of push and pull headlines that could come between now and the end of the year with regards to trade in China, and that could go really either direction at this point. So again, I think if we do get a nice rally from these levels, you're going to want to reward the market and at least be a little bit more proactive in playing defense, especially if just a couple weeks ago you were saying, man, I wish I would have been able to get some hedges on at a little bit better prices. We're getting pretty close to those levels again.
I keep hearing a lot of talk about the fact that the rain has pretty much shut off in a lot of Illinois. That's got people worried about finishing out the crop right before maturity. I thought maybe that would help the beans more than it would the corn, if that's the case. What do you think about that?
Yeah, I think there's a few different things at play, and it's something that we've talked about over the last couple of weeks, especially going to see it for ourselves on the crop tour last week, going through central Indiana and Illinois, and it was certainly a lot drier than the producers wanted to see. They could have used some rain and could still use some rain to finish out the crop. So I think that's probably helped keep the market a little bit afloat. And then on the other side, I think the headwind comes from just the lack of Chinese purchases. So you've got kind of a push and pull factor here into what is seasonally a weaker time of year, maybe choppier to weaker time of year. So again, with that in mind, I think if we do get a little bit higher price action, probably a good place to play some defense. We like to look at the options market for that. Kind of limits the downside risk and keeps that upside open for people.
By the way, I've heard a lot of talk about southern rust in the corn really impacting this late corn this year. Are you hearing that from your clients?
We have heard that, and we saw it, a lot of it in Iowa, which I guess this week has been renamed the Rust Belt. So I think that's certainly a concern, and potentially, another tailwind of the corn market that we've seen here over the last couple of days is that concern and the potential impact on yield. So I think corn's got a few different things going for it. The demand continues to be strong, and the technical picture is certainly firmed up going into a new month of trade. And I think, talking about constructive setups, we can hop straight over to the wheat market as well, which has just been the dog of the grain markets all month. We've been trading and consolidating in this little box here, but we did start to see some bullish divergence. So we were making new contract lows while the RSI down here was not making new lows. So that's what we refer to as bullish divergence. We were able to chew through this trend line and out above the 20-day moving average on a closing basis finally today. Again, like the corn market, this is one of those scenarios where you really want to see some follow through into next week's trade. From a risk-reward perspective, I think wheat potentially has the biggest bang for the buck here, but it is the wheat market, so tread lightly.
It seems, it's kind of odd to say that, but it seems like it's having to bid up for acres. I heard yesterday a gentleman in the High Plains telling me that they thought the acreage would be way down on wheat.
I think that's probably going to be the case, and I wouldn't be surprised to see the market starting to try to buy some of those acres. Again, the wheat market's been kind of the dog of the three grain markets. They've all had pretty lackluster summer and late summer trading ranges. But it certainly feels like the tide is starting to change here a little bit. So hopefully we can keep that momentum going into next month's trade.
All right, on livestock, wow, look at that finish. The cattle, they closed much, much, much closer to the highs than they did the low of the day. So another test of the upside.
Yeah, we had a big reversal on Wednesday. It led to a little bit more follow-through, selling pressure, long liquidation, whatever you want to call it, in Thursday's trade. And then right out of the gate, we saw a little bit weaker price action, but then buyers were ready, willing, and able to step in live cattle and feeder cattle. The fundamental backdrop continues to remain very strong, and the consumer continues to be very resilient. So, I mean, I don't know what more there is to say about this cattle market that hasn't been said. I continue to really just try to preach the amount of caution that needs to be taken at these price levels. The notional value of these contracts is essentially twice is what it used to be. 5+ years ago. So there's a lot of money involved in these markets, and it's important to manage your risk and sizing appropriately, whether you're hedging or speculating. The options, I think, have become a bigger player in the market. Just gives you a little bit more peace of mind instead of battling with the futures day in and day out, which seems very, very difficult to do. You get these little rug pulls intraday and then sharp rallies, and you get these wide trading ranges on any given day. But a lot of that range is developed within 10 to 20 minutes, and it's largely unpredictable. So again, fundamentals remain strong. Funds remain very, very long, and they've been defending that long position. It'll be interesting to see if rolling the calendar over into a new month sparks any profit taking, or we just continue to go up and to the right like we have been.
So what do you think is more treacherous, the live cattle or feeders right now?
With the feeder cattle's, I mean, for sure, it's a bigger contract, the wider trading ranges as well. So I think the 14-day average true range down here, we've got it at $6.50 for this November contract. So that's again, that's a lot of money flying around. It's about $3,200 for one contract on any given day, and that's just the average range. There's been many times where we've traded outside of that range. So again, managing the risk is extremely important in this environment. And then the average true range for live cattle, go back to that, it's 382. So that's still really, really wide for this contract, but not as much money really flying around as what we're seeing in the feeders.
Well, and then you look at the lean hog trade, and we pointed out on Wednesday that it broke out of that downward trending channel, or the wedge formation that had been building for a long time. And it made a convincing move out of that now for the last week or so. Does that look pretty healthy now?
It does look very healthy. We touched on it earlier in the week, the consolidation, and kind of a change in seasons, not just outside, but seasonally in the market as well, where we're coming out of a bearish time of year and turn the calendar into a more friendly time of year. And then you've got technical confirmation, a breakout above trendline resistance and the 50-day moving average. Now you can see the 20 days about to cross over the 50-day, or the purple line is about to cross over the red line. So there's a lot of green lights here on this chart that look really constructive, and especially if cattle continue to go higher, I think that could potentially be another tailwind to the lean hog market, and we could probably go revisit those old highs from back in June sooner rather than later, which earlier in the week, last week, it seemed like quite a ways away, but heck, we're only a couple bucks away from that here to round out the week.
I know you follow this pretty closely, but December gold made a big move to the upside Friday afternoon.
Huge moves in the metals, which was really encouraging to see. We run a metal CTA, or commodity trading advisor, basically a metals fund. So we love to see the positive price action in that. And I really think that we could just continue to see the metals work higher throughout the rest of the year. There were a few different things at play to round out the week, including potential uncertainty with regards to the Russia-Ukraine peace talks falling through, sanctions on Russia, additional sanctions coming from the EU on Russia, and then you've got some concerns over the Federal Reserve as well. So a few different things that played to round out the week. Gold really just back at the top end of the range, though. If we can chew through that, I think that this thing could get another bit of oomph behind it and propel higher. And then silver, we saw that basically today as well, breaking out above those old highs. So again, I think we continue to see these markets work higher over time. Is it going to be a one-way ticket? I don't think so. But again, running a metals fund, we've been having a lot of conversations with institutional investors recently, and that continues to grow. Prior to the last year and a half, 2 years, the institutional appetite for metals, precious metals, or industrial metals has been really quite tame. But with the moves that we've seen throughout this year, last year and a half, that has certainly picked up, and I think that's going to continue to be a trend, and hopefully that's a continued tailwind for the market.
Now, the equity markets, they seemed kind of tired on Friday afternoon. Do you attribute that to being the end of the month or not?
Yeah, we had a nice day yesterday, then gave back some of those gains in today's trade, maybe a little bit more, I think, is probably end of the month trade. Again, some uncertainty with regards to geopolitics and potentially what's going on in the Federal Reserve. So a little bit of profit taking. I don't think it was anything too crazy or too out of the norm to round out the month, just people booking some profits ahead of a long weekend. can always reposition and see what next week brings as we just start September, which is crazy.
I'm glad you brought that up because as we come into next week, we're not going to have any trade on Monday. It's going to be Labor Day. And so, from what I understand, the notes that I have seen from the Board of Trade and CME, trade won't reopen until on the grains until Monday night at 7 o'clock Central, right?
That is correct. So we close on Sunday night. There won't be a reopen on Sunday night. Close on Monday and then reopen Monday evening. And I'm not sure that we're going to get the moves that we maybe would have seen a couple weeks ago in the grain markets, because I think weather is becoming a little bit less important, especially for corn, maybe a little bit still important for beans, but I don't know that we're going to see those big moves up or down like we saw over the last couple months.
And I just have a sneaking suspicion that we're probably, between now and then, going to hear about quite a few combines starting to move out into the field. That should be interesting times. So if Monday is a holiday, I guess I won't be talking to you until next Wednesday. Would that be right?
That's gonna be right. I'll hopefully be enjoying some barbecue or something outside on Monday afternoon. I love talking to you, but I wouldn't mind a day off.
Yeah, I know how it is. All right, well, Oliver, it's great to visit with you again, and hope you have a good long holiday weekend out there. That's Oliver Sloup of Blue Line Futures with us, of course, and I appreciate you joining us with us, too. We'll talk with you again next Wednesday, I guess. I'm Marlin Bohling. Have a great weekend.